Hello and welcome to Market Domination Overtime. Stocks closing higher on Trump's latest trade deal news. Jared Woodbury over at the Wi-Fi Interactive with today's moves. Jared.
Thank you, Josh. Let's take a look at the major indices. Dow closing up today over 500 points, and that is good for 1%. A look at the intraday price action shows closing near the highs of the day, and we were there most of the day, so it was kind of a little, I wouldn't say gap and go, because we were in the red in the earlier part of the day, but that did not last long. NASDAQ Composite off of the highs here, but still good for 0.5%, just a little bit more than that. S&P 500, very similar story there, and the Russell 2000, the small cap index, also off of its highs, but up nearly 1%. And let's skip over to the large cap sector action. Today, it was a story of industrials. That's after that hot ISM print, best manufacturing activity that we've seen since, I believe, 2022. Industrials closing at a record, and I believe Staples closed at their first record of 2026 as well. They closed over 1% up, as did financials and tech in fourth place there. What didn't work today, energy down almost 2%, utilities down 1.5%, real estate down 1%, and communication services down 0.4%. And taking a look inside the NASDAQ 100, Apple, a big standout here, up 4%. So is Walmart. Micron up 5%. And I got to show you what's going on with the semiconductors. A lot of those screaming higher. Not NVIDIA, not Broadcom, but I'll sort by performance, show you SanDisk once again just screaming higher. Let's see what it's done year to date. Up 180%, and it's the first day of February. How about that? Lumentum up 8%, so is Western Digital. We covered Micron. Intel back in the game, up 5%. It is now back up 32% this year. And let's skip over to software, because that is not the prettiest picture there. Atlassian leading the way down about 4%, and a couple others in the red, but not too bad. And I do want to leave off on the transports. Those got a huge boost from the ISM report this morning. We're seeing especially the airlines, Delta, Southwest, United, each of those up more than 4%. FedEx at a record here, up 4%. UPS nearly 4%. And a lot of the names that we don't talk about, like Ryder, Landstar, those names were up 6%. Now I'll throw it back to you, Josh.
All right, Jared. Thank you. While AI remains a big story for markets, it is no longer the main driver of the market rally. Today, we're seeing NVIDIA and Oracle fall while broader markets surge. Our next guest joins with some ideas to diversify outside of the AI theme. We have Gargi Chaudhuri, BlackRock Chief Investment and Portfolio Strategist for the Americas. Gargi, it is good to see you. So looking ahead to 2026, Gargi, big picture, you say 2026 could have strong growth. You're looking for easier Fed policy. You talk about accelerating productivity. That sounds pretty good. You don't say buy everything here. You don't say time to just back up the truck. You advise clients selective risk taking for 2026. Start there, Gargi. What does that actually mean for investors? How do you define that?
Good afternoon, Josh. It's great to be on with you and Julie. So to your point, we just published our year ahead outlook in January. And one of the themes that we talked a lot about is just this idea of continued dispersion, but us remaining risk on within the framework of continued dispersion in equity markets. So what do I mean by that? First of all, AI is no longer the only game in town. It's certainly one of our favored expressions, but we think that within AI, it's not going to be a monolith anymore. So really active management with AI, and even the dispersions that you were talking just about earlier with respect to just semis versus software, for example, I think we're going to see more of that dispersion and disruption. So that's number one. But also recognizing that there's opportunities outside of the AI theme. And we're already seeing that broadening come through, not just in returns, but also in earnings growth. So expect to see that continue to take place. Value is where we think investors should be allocating. And then lastly, don't forget to add the diversifiers in your portfolio. So certainly a room for bonds, certainly a room for other commodities, which I know has had a fair amount of volatility in January, but that all plays a role in a portfolio. You mentioned AI, Gargi, and listen, we're going to have Palantir reporting results here any minute. Clearly, an AI winner. The trillions, being spent on AI infrastructure. I'm sure, Gargi, you go out with clients, investors, they ask you, okay, when is that going to broadly turn into profits? What do you tell them? And that is a question that's coming up a lot from clients. What they're looking and what the market is actually rewarding is that profitability. So more and more capex by itself is not necessarily rewarded as much as revenues are. We saw that in the few names that have reported earlier last week, and I think we're going to continue to see that in this earnings season, that you need to actually be able to monetize. Having the ability to do capex isn't enough. And one thing that the clients that we talk to are actually voting on and actually allocating to is the diversification within the AI theme. And what I mean by that is, obviously you've got sort of the semi and the software names that are dispersing, but there's also the flow into EM, which is massive. And that is an AI story we think that clients are waking up to and allocating massively to. Huge amount of flows into IEMG, which of course is our iShares EM ticker, as well as names like South Korea and Taiwan, which are receiving a lot of inflows. So clients want AI, but they also want AI in different forms that's outside of just the US.
As we make our way through earnings season, Gargi, listen, we heard from some big tech last week. Got another big couple names this week. Got Amazon, got Alphabet. What have been so far, Gargi, your big takeaways from this earnings season? What have you learned?
Yeah, absolutely. So the three things that we've been focused on, the first one is continuing to see that broad-based sort of broadening out. So it's not just about the AI names. You're seeing some beats come through. And if you look at beats versus misses, certainly the beats broadening out across different sectors, whether that be within financials, whether that be in broader utilities and infrastructure specifically. So that's really very good to see in the markets. I think a very healthy sign. That's number one. Number two is we focused on, there's this huge concern that investors feel about the strength of the labor market. So we've been paying particular note to see what kind of, what we're hearing on the transcripts and what we're hearing from companies about any plans to lay off, and to what extent that might be related to AI. And obviously that is a concern that we hear with respect to AI taking jobs. And obviously that's not something, there are some headlines about layoffs, but you're not seeing broad-based firing across the economy, which obviously lends itself to some of the very strong economic growth that we're seeing, which we think will continue to lead to higher markets. And then the last thing I would say is tariffs is very much a thing of the past. That was obviously something that was still prevalent when we were getting Q2, Q3 earnings reports, but certainly something that we're more and more not focusing on. So those three themes are really broad-based growth and broad-based revisions, which we think is beneficial to the broadening out trade. And we like to play that in IWD, in value, in DYNF, which are two of our favorite tickers. Secondly, no broad-based layoffs in the economy. And I think that's very good for consumer spending. And then thirdly, really focusing on tariffs as being a thing of the past, so consumer sentiment continuing to hopefully remain higher.
Finally, Gargi, you say here most respondents in your latest client survey bullish in terms of what they like. They called out U.S. stocks. They also called it emerging markets. Why now for emerging markets, Gargi? I'm just curious. What would you see as sort of opportunity and risk there?
Yeah, absolutely. So obviously emerging markets had a great 2025. And one of the things that we actually noticed in our client portfolios, especially for those that are based in the United States, advisors whose portfolios we tend to look at have that underweight to emerging markets. And much of the allocation is actually to US markets, which has worked every other year in 2025 and 2026 so far. Why now? It certainly started last year. The theme for emerging markets is that when DM does well, EM gets a huge amount of tailwind as a result of that. Obviously, DM growth, US growth continued to be very strong, higher than potential. Policy easing, that's another big story for EM outperformance. And most importantly, the US dollar remaining stable. It doesn't have to drop like it did last year, but just remaining stable is very, very good for the EM equity story. And I touched upon this earlier, but focusing on the AI diversification theme as an EM play also is something that clients are focusing on. So very much a covering of an underweight story, huge amount of inflows in the EM trade already in 2026. 2026. So we're seeing that in tickers like IEMG. We're seeing that in tickers like EWY, which are, finally gathering some flows after not so much last year, despite the very good performance.
Gargi, always great to see and to have you on the show. Thank you.
Great to be here.
Palantir, fourth quarter earnings just now crossing the wire. Let's get you those results. Q4 EPS 25 cents versus expectations of 23 cents, and revenue up 70% to 1.41 billion. So those are beats on the bottom and the top there. Segment revenue, U.S. government, 570 million. That's a beat. U.S. commercial, that's up 137% to 507 million. So that is also a beat. Turning to the guide, Q1, they're calling for adjusted operating income between 870 and 874 million. That's a beat. Revenue, they're calling for between 1.532 and 1.536 billion. That also beats consensus. Now for the full year, Palantir saying they're looking for adjusted operating income between 4.126 and 4.142 billion. That's a beat. And the revenue forecast easily beats consensus. They're calling for between 7.182 and 7.198 billion. And the street was closer to 6.27 billion. No surprise, the stock is up right now. Heading into this print, the stock was up around 80% over the past 12 months, but it was down about 15% this year. It was down about 30% from its all-time high back in November. And analysts who cover Palantir chalking that up to, in part, they say Palantir was just not immune from the broader sell-off we had been seeing in the software sector, but at least the initial reaction here, very positive. We're surging 6% in the after hours. I did have the chance to catch up with Palantir CEO Alex Karp. We talked about the quarter. Here's his summary. He says, the people focused on the market don't understand how it works on the front line, on the battlefield, or in very complex businesses. We have this thing that actually unlocks the underlying value of AI. That's how you get these numbers. I also asked Karp about risks that AI could at one day long-term disrupt his own business. Karp telling me, in tech, you only have a time horizon of a couple years. You can't say you will never be disrupted. That's why you have to be alert. But we have made investments in this tech years ago, all of which we thought would be valuable. Honestly, Karp told me, it looks like the products and the culture we have are ideally built for the time we are in now. We are a different species of company. And finally, I did ask Karp about just that broader geopolitical AI competition. What's the state of kind of chessboard right now? Karp saying, what do you do if you are Western Europe or Canada? How do you explain to your people that you are not participating in this revolution? The only countries, he told me, participating at scale are the US and China, and we have a different problem with China. Do we stay far enough ahead militarily so that we make sure that we set the rules and they don't? Palantir surging right now in the after hours, up nearly 7%. Well, coming up, we have more on Palantir's earnings. That's next on Market Domination Overtime. Palantir reporting fourth quarter earnings just moments ago. Let's get some more reaction with Shay Boloor, Chief Market Strategist at Futurum. Shay, Palantir just reported, results crossed the wire. We are surging here. We're up about 8% in the after hours. What do you make of the results, Shay?
First and most important, the growth debate is officially over. I mean, I think a lot of the AI bears were bracing for a deceleration in Palantir's 2026 guidance. We actually got a reacceleration. They were embracing for a low 40s. Palantir just guided a 61% growth for 2026. So that is the single most important data point in this release, in my opinion, because it's showing that growth is continuing to reaccelerate off an already massive base. And that alone validates the peak growth narrative that drove the drawdown to earnings, especially when the market is just so risk off on anything dealing with software. But this print alone proved that Palantir is not enterprise software. They truly are infrastructure. And more importantly, this isn't coming from one-off contracts or just any kind of single vertical. It's their whole business. Their US commercial revenue went up 137% year over year, and they guided to over 115% growth next year. So that tells me demand is broad, it's repeatable, and we're still very early in what Palantir's commercial build-out is going to be.
On that commercial build-out, I'm glad you picked up on that. So U.S. commercial, 137%. It's up to 507 million. That was an easy beat. I mean, the analysts had penciled in 479. What is Palantir's secret sauce here, Shay? What are they doing different?
They're essentially walking into these rooms, asking their customers, what do you want AI to do for you? And then they actually do them. They're not just an AI wrapper centered around someone else's data. They're not just some kind of marketing slogan that they're using instead of being SaaS, now they're AI. Like, this is truly, what can AI do for you? And we will accomplish that for you. And I think that right now it's safe to say commercial momentum right now in Palantir is becoming the core story. It's not just a government business anymore. Government remains strong, clearly. I'm not saying that's going away, but the center of gravity has clearly shifted. I mean, the commercial TCV, the commercial growth, they're all exploding at once. And that tells me that there's deeper deployments, there's faster expansions, and these customers are seeing what Ontology can provide now. So I think the past 2 years were kind of proof of technology for Palantir. Now, I think the customers are like willing to trust what they're selling and just let it run, especially when agentic AI hasn't even started yet. We just saw this past month the ability of what AI agents can offer now. We're at that phase of the AI cycle with Clawbot and the Claude Code. Now, once that scales, that's another leg for the Palantir commercial business. And I think that they already did all the legwork to get that trust from these customers. Now, as agentic AI really takes off, they're more willing to explore deeper deployments. And I just think that this partner-driven flywheel that Palantir has now is just really super early. If you think about the TAM opportunity, it's nobody's making more money in AI other than Jensen and NVIDIA than Palantir, and you're showing more proof of that.
Shay, we have seen, to your point, this sort of broader sell-off in software, right, which has been rough. I mean, Microsoft, Salesforce, ServiceNow, Adobe. I mean, investors seem to have said, listen, we think AI is playing out in chips. We think it's playing out in Meta, but they clearly have steered clear of software. One, I'm just curious what you make about that trend and theme. And two, whether you think you look at these results and say, okay, but there are some names like Palantir that seem to be separated, that stand apart.
Yeah, I think there's a nuance now investing in AI applications. There used to be a time where a lot of the revenue is going to be was pretty predictable based on the contract length, the business model itself. You create one code and then you launch it repeatedly at a very high margin. I think now we're seeing signs where a lot of these software companies are losing value because AI is automating a lot of work that's causing their application to become more and more of a commodity. It makes their product a lot less unique. The difference between Palantir, clearly, after this report, is like Palantir gains value when AI shows up because it's the system companies actually run to have AI inside their business. So that essentially is going away from a company saying, like, we just added AI to a company saying, this is how AI makes real decisions in the real world. I do believe that we're in the lazy part or the fluid part of the market where anything SaaS related or adjacent is just getting taken down blindly. That will change eventually, because even if I do believe agentic AI is going to take off, that's going to create dozens, hundreds, thousands of more digital products into the world. What do you have to do with those products? You have to protect it. That's the amount of data that's going to get generated, and agentic AI is going to be wild. You're going to need security. That's not going to get taken away at all from AI agents. So, but if you look at the stock market, I mean, CrowdStrike's down, Rubrik's down, Zscaler's down. Across the board, cybersecurity is down. That shows me that the market is just punishing these companies first, then asking the tough questions later. That will change. Maybe this cycle, that's going to happen, but I don't think it's going to be a quick flip of a switch. All of a sudden, software is going to be great. I think it's going to be a couple quarters to prove to the market that in this inflection points for AI agents, like the business is not suffering. In some ways, some are expanding. They're going to get rewarded. I mean, I think you're going to see a lot more openness from these software companies on proving what the AI is causing their metrics to show reacceleration this quarter, maybe next quarter, just because that's the only way you can change a narrative. I mean, MongoDB, a lot of people don't talk about MongoDB, but like they're acting pretty well against this SaaS backdrop because they've proven 3 straight quarters of reacceleration in their Atlas business. I think that good enough is not okay anymore in the market's eyes. You need to show a reacceleration to get rewarded by the market, and Palantir is clearly showing that every 3 months, and they're justifying that valuation just because they're in a league of one, especially when the AI tsunami is coming for the whole space. They clearly have the largest boat to survive that tsunami.
So, Shay, who would you consider at this point Palantir's competition? Does Alex Karp have rivals, or do you think, Shay, as you said, it's one of one? It's a league of one right now.
Listen, they've had years to come up with the competition. I mean, commercial business is 3 years in, and I haven't seen one. And I just don't think there is one, because it's a similar story as NVIDIA in the AI accelerator market. Like, this was not an overnight success story for Jensen and the team. Like, they were working decades and seeing what the AI economy is going to be formed. Karp and team was doing the similar thing. We just got to an inflection point where they're able to scale their commercial business to really change the narrative of government black box to now they're the operating system of AI. So I do believe that maybe there might be some competing products, but it's going to be very niche. It's not going to be anywhere to scalability as Palantir does, because when you're a customer and you're showing you see the ROI that Palantir can offer, their competitors also see what's happening inside the organization. So they're going to be more willing to trust and adopt it. And Palantir is one of the stickiest offerings out there in enterprise, and you just don't take it out for a 70% good enough product that might save you a couple of dollars, when this truly is giving you all the information you need, providing they're owning the translation layer inside all these large organizations that doesn't matter what AI model wins, Grok, Gemini, ChatGPT, like they are truly the picks and shovels winner of all that best AI model race. And if you're going to invest billions of dollars in these frontier models, like might as well have Palantir infused into your organization, because there's only so much you can do with the information you get from these models. You need to act in the real world, and Palantir's the only way to do so. So I think we're years away from that. And Karp is just he knows this business better than anyone else. And I think he can always stay in front of what the latest and greatest is. And I am excited to see what he's going to do with AI agents once it starts scaling up. Like, this is a once in a lifetime company, and they are proving yet again today.
Shay, appreciate that instant analysis, sir. Thank you.
Thanks for having me.
All right, time now for What to Watch Tuesday, February 3rd. Another busy day on earnings on deck Tuesday. We're getting reports from the pharmaceutical sector with Merck, Pfizer, and Amgen. PayPal also reporting before the markets open. And then after the close, investors will be watching AMD closely. Analysts expecting AMD to have a solid Q4, but the real growth story right now is CPUs, with the GPU payoff likely coming in the second half of 2026. Chipotle also in focus with Q4 earnings after closing bell. Analysts anticipating same-store sales to dip despite heavy promotions, while margins may tighten as discounts and higher costs weigh on results. On the media front, Netflix co-CEO Ted Sarandos is heading to Capitol Hill on the hot seat over the company's proposed deal to take over Warner Brothers Discovery. That hearing starts at 2:30 p.m. Eastern. Well, that's going to do it for today's Market Domination Overtime. Be sure to come back tomorrow at 3 p.m. Eastern for all of your coverage leading up to and after closing bell. But don't go anywhere. On the other side of the break, it's Asking for a Trend, and I've got you covered for the next half hour with the latest and greatest market-moving stories. Stay tuned.